Now, I would like to explain the background of the borrower. Borneo Cocoa Sdn Bhd was established in 1994 and is located in Tawau, Sabah. The company processes local cocoa beans into cocoa butter, cocoa liquor, and cocoa powder. Its products are supplied to well-known brands such as Nestle, Cadbury, and Mars, and are sold in both local and international market. The company is led by Managing Director Mr. K.Y. Hong, together with Director Mr. F.L. Chin and Mr. O. Hashmeng. To ensure a sustainable cocoa supply, the company plans to buy a 10-hectare cocoa plantation near its factory. It also aims to invest in green energy, organic farming, and obtain 4C sustainability certifications.
So today, I will briefly explain the purpose, loan facilities, and utilization. Borneo Cocoa Sdn Bhd is approaching the bank for total credit facilities of Rm 3 million to expand its operation by establishing a new 10-hectare cocoa farm in Tawau, Sabah, located just 10 kilometers from its existing factory to significantly cut down on logistic costs and accelerate daily operation. This strategic project aims to secure a self-cultivated, consistent supply of cocoa bean while adopting sustainable agriculture techniques to capture the rising domestic and international demand for premium cocoa product. The proposed Rm 3 million financing package comes with a 2% annual interest rate and is structured into 3 specific banks, which is service, a 10-year term loan for land acquisition and farm establishment, a 9-year hire purchase for specialized farm machinery, and an overdraft facility acting as a multi-purpose cash line for day-to-day business expenses. To ensure maximum operational efficiency, the fund allocation is strictly managed. Rm 1.5 million will be used for the land purchase. Rm 500 is dedicated to farm development like land clearance and basic structure. Rm 500 ringgit will be invested in green energy technology and eco-friendly machinery to boost yield without harming nature, and the final Rm 500 ringgit will be retained as a working capital to support the initial operating expenses. To sum up, this loan will enhance the company market standing and efficiency, serving as a crucial driver for long-term sustainable growth.
So, I will present the project to be financed. First, Cocoa is requesting Rm 3 million loan to develop a sustainable cocoa plantation in Tawau, Sabah. The project aims to secure a stable supply of cocoa beans, reduce dependence on suppliers, and strengthen the company's supply chain. The main risks include agriculture, market, operational, financial, and environmental risks. However, with sustainable farming practice, proper financial management, and effective operational planning, this risk can be managed. Therefore, the project is considered feasible and support the company's long-term growth. The 3 million financing will be allocated to 4 main purposes. Rm 1 million will be used to acquire the plantation, Rm 500,000 for plantation development, Rm 500,000 to purchase green energy plantation equipment, and another 500,000 for working capital and sustainable plantation development. Second, risk assessment. The project has a moderate level of risk. Agricultural risks such as weather, pest, and disease may affect cocoa production. Market risks include fluctuation in cocoa price and demand, which may reduce revenue. There are also environmental and regulatory risks if the company does not comply with sustainability standards. However, this risk can be managed through sustainable farming, product diversification, and compliance with regulations.
Now, I will present the business and operation of Borneo Cocoa Sdn Bhd. Borneo Cocoa Sdn Bhd is a food manufacturing company that processes natural cocoa beans into premium cocoa products, including cocoa butter, cocoa liquor, and cocoa powder. All products are made without artificial coloring, flavoring, or preservative, and the factor is HACCP certified to ensure food safety and quality. The company serves both local and international market. Its major customers including Nestle, Novartis, Cadbury, M&M Mars, and Jerkins. BCSB also export its product to Western Europe, East Asia, North American, and South American. To strengthen its supply chain, BCSB plans to purchase a 10-hectare cocoa plantation. This will ensure a stable supply of sustainable cocoa beans, reduce dependence on suppliers, and support long-term business growth. In conclusion, Borneo Cocoa Sdn Bhd has a strong market position and good growth potential, supported by its focus on sustainable cocoa production. I will present about the economy, industry, and market condition of Borneo Cocoa Sdn Bhd. Firstly, Malaysian cocoa industry show positive growth due to increasing global demand. Cocoa export increased to RM 15.06 billion in 2024, creating good opportunity for Borneo Cocoa to expand its business. However, the company still faces risks such as inflation, higher production costs, and currency fluctuation. For the industry condition, Malaysian cocoa sector continue to grow, but challenges such as climate change, pest problem, and labor shortage may affect production. In terms of market analysis, Borneo Cocoa has a strong market presence by supplying cocoa production to international company and exporting to different regions worldwide. Lastly, external risks such as cocoa price change and sustainability requirement may affect the company. Therefore, Borneo Cocoa focus on sustainable farming and improving its supply chain to maintain competitiveness.
Return on asset ratio reflect a company efficiency and profitability in using its asset with a ROA of 7.24% in 2021. The business was able to generate profit through efficient use of its asset. The ROA has improved to 8.74% in 2022 due to better asset utilization and profitability. The company great capacity to effectively utilize its asset during a time of rising sales was demonstrated in 2023. When ROA peaked at 12.20%, continued the upward trend. In 2024, ROA significantly fell to 3.01%, reflecting poor profitability and asset utilization. By 2025, the ROA edged up to 3.95%, showing improved asset utilization efficiency, which may have been supported by the rising demand for cocoa and improved operational efficiency during year one. So the second one is equity. Equity is used to measure the firm's ability to yield profit from investment of shareholder capital. With ROE of 7.3% in 2021, the business was able to profitably use shareholder equity. This indicates that the business is becoming more profitable and using equity more effectively in the business. As the ROE increased to 8.9% in 2022, the ROE reached a record 12.3% in 2023, building on its recent upward trend, which completes the company's strong capital efficiency and its revenue growth has surged. Nevertheless, the ROE sharply decreased to 3.1% in 2024, indicating decreased profitability and inefficient use of equity. By 2021, the ROE rose slightly to 4.1%, indicating that the company has regained its ability to generate profit for its shareholder, potentially due to improved operational efficiency and growing market demand. Working capital is an indicator of the company's financial strength and ability to conduct business. The working capital for 2021 is 435.40, which show that the company has a good liquidity position and sufficient current asset to pay the current liabilities. In 2022, the working capital was significantly reduced 318.6.32, which means that the business was using more of its current resources but still had enough liquidity. In 2023, the working capital stood 435.95, indicating better management of current asset and current liabilities, demonstrating the company's ability to manage its currency activity efficiently. However, working capital fell to 356.05 in 2024, which could be a sign of a decrease in current asset or increase in short-term debts. The company working capital also decreased to 303.60 in 2025. Despite having positive working capital figure and the ability to meet short-term obligation, it showed a trend towards less net current asset available to fund its operation. The current ratio evaluates how well the company can use its short-term asset to pay its short-term obligation. With a current ratio of 50.48 in 2021, Borneo Cocoa Sdn Bhd was able to meet its short-term obligation and had a healthy liquidity position, even while the company still had enough current assets to cover its current liabilities. The ratio dropped slightly to 44.08 in 2023, indicating a fall in liquidity. The current ratio rose dramatically to 124.17 in 2023, suggesting a very strong ability to satisfy short-term obligation as well as extremely effectively management of current asset liabilities. But in 2024, the ratio dropped to 44.59, indicating less liquidity than the year before. The current ratio dropped to 27.11 by 2021, indicating that the business was less able to fulfill its short-term obligation. Even while the ratio was still positive, the drop could be a sign of growing financial strength and a larger requirement for efficient working capital management to preserve operational stability. Non-current asset turnover ratio measure how to the business utilize the long-term asset. The ratio was 1.44 in 2021, which suggests that the use of non-current asset was not very efficient. The ratio of Borneo Cocoa Sdn Bhd has improved to 1.18 in 2022, which means the company was being able to generate more sales from its long-term asset. There was a slight decline, decline to 1.61 in 2023, showing a brief decline in the efficiency of asset utilization. However, in 2024, the ratio shot up to 2.33%, which indicate increased efficiency in generating revenue growth for non-current asset. The ratio reached 3.28 by 2025, indicating the company excellent capacity to make better use of its long-term asset and produce greater income levels.
Next, I will explain the collateral and guarantee. For collateral, Borneo Cocoa Sdn Bhd offer a 10-hectare freehold cocoa plantation as security for the proposed loan. The plantation has an estimate market value of Rm 2.5 million based on an independent valuations. Since it is a commercial agricultural asset, it can generate income and has good value. After the legal process is complete, the plantation will be registered as the bank first legal charge, giving the bank strong protection if the company is unable to repay the loan. Besides the collateral, the loan is also supported by personal guarantees from the company three directors, Mr. K.Y. Hong, Mr. F.L. Chin, and Mr. O.H. Meng. They are actively involved in managing the company and have strong experience in the business. Their personal guarantees are legally binding, which give the bank additional confidence that the loan obligation will be fulfilled. Overall, the combination of the collateral and the director guarantees provide sufficient security for the bank even if there are unfavorable economic conditions.
Next, I will explain the credit risk analysis and mitigation for Borneo Cocoa Sdn Bhd using the 5Cs model and Kapari model. Starting with the 5Cs model. Character is low risk because the company has experienced management. Capacity and capital are also low risk, but the bank should monitor cash flow and many require additional equity if needed. However, condition and collateral are high risk due to cocoa price fluctuation, climate factors, and lower collateral value. To reduce this risk, the bank should offer a shorter loan tenure and obtain personal guarantees from the directors. Next is Campari model. Character, ability, purpose, amount and insurance are low risk because the company has good management, a clear business purpose, and insurance coverage. Meanwhile, margin and financing and repayment are high risk because the financing amount is high and repayment depends on seasonal cash flow. Therefore, the bank should reduce the financing amount if necessary and align the repayment schedule with the harvest cycle. Overall, the loan is acceptable because the risk can be managed with appropriate mitigation and strategies. Our credit decision is to approve the loan with conditions. This is because Borneo Cocoa Sdn Bhd has experienced management, a strong business performance, good repayment capacity, and the loan is for business expansions. Although there are risks such as cocoa price fluctuation and lower collateral value, this risk can be managed. Therefore, the bank should approve the loan subject to several conditions, including obtaining a first legal charge over the plantation, personal and corporate guarantees, comprehensive insurance on all financial assets, and submission of all required supporting documents. Overall, the loan is recommended because the company has good growth potential and the risks are acceptable with these conditions.